Hello and welcome to this video on provision for doubtful debts. So I've got a question here on provision for doubtful debts to show you how to do your nominal ledger accounts and the effect on the financial statements. So Ross Engineering has an existing provision for doubtful debts of £300. So what it means, he does not expect to get £300 from his trade receivables at the end of the year. It's based on 5% of the trade receivables. So 5% of them, he does not expect to get the money from them. And that's all based on the past history. That's where he gets his 5% from. After writing off irrecoverable debts, now irrecoverable debts are the amounts they know for definite that it's not going to receive. The amounts of trade receivables at the end of the next 2 financial years are found to be the following. The 30th of June 2021, the net trade receivables will be £8,000, and the 30th of June 2022, trade receivables are £7,000. So they both exclude the irrecoverable debts, the debts they know for definite that are not going to receive. They do not include the provision for doubtful debts. The business continues to keep the provision for doubtful debts equal to 5% of trade receivables. As an accounts assistant at Ross Engineering, you are to show Part A, the adjustments to the provision for doubtful debts at the end of financial years, ended the 30th of June 2021 and the 30th of June 2022. So for that, we're going to show the nominal ledger accounts, also known as T accounts, and B, how the provision for doubtful debts will be recorded in the financial statements at the end of the 2 financial years. So you're going to put together a little table for that. Now, the first thing we need to know is what the provision for doubtful debts is for each year. So at the end of June 2021, our trade receivables were £8,000. So I've got £8,000 in now. And the provision is 5%. So the provision for doubtful debts is going to be £8,000 times your 5%, which is £400. So that means at the end of June 2021, the business does not expect to receive £400 from its trade receivables. 3rd of June 2022, the trade receivables are £7,000. Provision is 5%, so the provision then will be 7,000 times 5%. So at the end of June 2022, the business is not expected to receive £350 from its trade receivables. Now, this is not a set particular organisation or company or business that owes money. This is just a general provision, so it can be from a number of companies or just from part of a company. Right, now we've got to do a nominal ledger account, also known as T account, for the provision for doubtful debts. Now it says right at the beginning of the question, there's got a provision, an existing provision of £300. So that would have been based on the previous year, June 2020. So that means on the following day, the 1st of July 2020, the balance brought down is £300. Now, the balance carried down, we've just worked out at the end of our year, 2021, June 2021, that's £400. So that goes there. Now we just got our little T account for the year ended 3rd of June 2021. The debit side totals 400 and the credit side totals 300. Now the two totals must be the same, so we'll always put in the biggest total, so it's going to be 400 on the credit side as well. Then the difference between the £400 carried down, £300 brought down is £100, and that goes to our income statement. Now we've got a balance carried down on the 3rd of June 2021, means we've got a balance brought down on the following day on the opposite side, so that's going to be our £400. So that's what the business does not expect to receive at the end of the previous year. Now at the end of this year, June 2022, it does not expect to receive £350. So the balance carried down now is going to be £350. Now, this time, your debit side totals £350 and your credit side totals £400. So again, they must both be the same. So if we put the biggest total in, then we find the difference. So this time the difference is on the debit side. And the difference is 400 take away 350, which is £50. And that then goes to our income statement. So whatever the difference is, goes to our income statement. So you've got a balance carried down on the debit side of 350 on the 3rd of June 2022. So it becomes brought down on the credit side of 350 on the next day, the 1st of July 2022. So that's the provision for doubtful debts account there, showing the income statement figures for June 2021. That was an increase in provision for doubtful debts, so it'll be an expense of £100. But in June 2022, it was a reduction or a decrease, so that'll go underneath gross profit, reduction in provision for doubtful debts, and be treated as other income. Now, what goes in the income statement and statement position? We've partly just said that. So the June 2021 We've got an expense of £100 because the provision has increased. So it's an expense. And in the previous year, the following year, June 2022, it's reduced. So they're going to be treated as income. If we're getting it like getting back the £50, so it's going to be treated as income. Your statement of financial position, your trade receivables, we want the amount in the question, which was 8,000 and 7,000. Provision for doubtful debts we worked out was £400 and then £350. The net trade receivables will be the 8,000, take away the 400 for the year ended June 2021. And for the year ended June 2022, it'll be the 7,000, take away your £350, give you £6,650. So there's a little table to show you the entries in the income statement and statement of financial position. So thank you for watching this video, and I hope that you enjoyed it.